Welcome to the Market Frontlines. I'm Lyndsay Malchuk. Globex Mining Enterprise has spent years assembling one of the most diversified portfolios in the mining sector, with exposure across commodities, jurisdictions, and development stages. It's a company structured to generate value through ownership, through royalties, option agreements, rather than relying on one single asset or a single outcome. And at the center of that strategy is discipline, how capital is deployed, how risk is managed, and how opportunities are monetized over time. Now, joining me is David Christie, president of Globex Mining Enterprise. David, it is so great to have you here. I'm looking forward to this conversation.
Thanks, Lyndsay. It's good to be here.
Now, right out of the gate, Globex operates very differently than most companies investors see in this space. So before we break down the assets, let's start with the structure. How does this model actually work?
Well, at heart, we're an exploration company, so we acquire properties to explore. But unlike a typical exploration company, we don't live or die on one property. We're staking properties every week. Jack Stock, the founder of the company, he is quite prolific at staking properties and acquiring properties. And we continue to do that to this day. We take those properties, we push them forward. Sometimes we push them a long ways forward, like the Ironwood deposit we drilled off last year. But in most cases, we try to find a partner on the project, someone else to spend the money. So they pay us for the right to explore our property. We collect some cash and shares in that company, and they either earn their interest in the property or they give it back to us. If they earn their interest, we end up keeping a royalty, and that sort of brings in another side of the business. So we've got the exploration side. Then we've sort of got the land bank project generation side where we generate a project and get someone else to work it. But then there's the royalty side, which is sort of the end result of everything we do. So the whole idea is to eventually have a number of producing royalties that cash flow to the company and to shareholders.
Well, I mean, it's such an interesting setup that you have there. And I know Globex doesn't fit neatly into a single box. I mean, you've touched on it a little bit. You're not a traditional explorer. You're not a pure royalty company, and you're not a project generator in the conventional sense. So walk us through a little bit further how Globex actually makes money, how diversification across commodities and geography protects capital, and also why this model works especially well in volatile markets.
So as you mentioned a few minutes ago, we look at every commodity. So we're not just a gold-focused royalty company or project generator or exploration company. We look at everything from dolomite to gold to base metals to rare earths to antimony. You name it, we are in it. And so we're not focused just on the one metal. So we don't have that sort of cyclicity that's just in that one metal. We are about more than half precious minerals. So we are overweight on the gold side. But then we have about a quarter base metals. Another quarter is sort of specialty minerals and metals and critical minerals. So we're quite well diversified across the periodic table. So that helps us generate new deals when, let's say, the gold market's down. We do deals in copper and other base metals. Or if the base metal market's down, we have gold projects or rare earth projects. Right now, rare earths are in huge demand. So that's one way. And people pay us for that right to look at our projects. So we acquire properties when no one's caring about things. Like we have 2 antimony gold projects in New Brunswick. We've optioned both those out. The companies that picked us up are paying us cash and shares for that right to explore those properties. And so that's really good for us. And so the more properties we have under option, the better. And we continue to drive that focus to option out more of our properties.
Absolutely. But David, diversified model only works if the underlying assets have depth. And Globex has quietly amassed one of the largest private property portfolios in the sector. Now, Globex owns a significant number of properties outright. Where are you most active right now geographically? And more importantly, what are you doing to add value to those 100% owned assets before they are optioned, monetized, or advanced internally?
So I would say the center of gravity for us is Quebec. That's where the company was started, and we're still quite focused there. But we have a lot of properties in other provinces as well. We are focused in the Abitibi for the most part, which is a very prolific mineral belt where most of the gold and base metals in Ontario, Quebec have come from. And we are most focused on the Cadillac break and the Destor-Porcupine break. So right now, as we speak, we just finished a drill program on a project called Rouen Merger. We drilled about 1,000 meters of drilling there, 6 holes. The first couple holes came out recently, and they were spectacular results, really wide intercepts of gold mineralization. So I'll point people to that press release that came out last week, and there'll be more press releases on that as the rest of the results come out. And then we're right now drilling another project called Lyndhurst. It's a base metal project. We're looking for copper mineralization there, and we're quite excited about the potential. We're seeing, what we expect to see in the rock so far, and we're not at the target yet. So we're still drilling. It's a deep hole, and we'll expect to see those results sometime in the near future.
Well, let's flip the topic just a little bit here. And one of the most powerful parts of the Globex story is the royalty portfolio, because that is where leverage can quietly turn into cash flow without that dilution. So your royalty portfolio spans assets at very different stages. Which royalties are moving toward production? Which ones are being advanced through drilling? And which are reaching the point where economic studies or resource estimates are putting a real valuation on those assets right now?
So first of all, the royalty that's supposed to go to production this year is called Bell Mountain. It's in Nevada. It's a small gold producer. About 55,000 ounces in total will be produced. So we have a 3% GMR on that. So that's a pretty good. That's a gross metal royalty. That's a pretty good number that'll come to us, especially at $4,000 gold. So we're excited to see that go to production. It'll bring us some cash flow. Also, when you look at the iron project we have, Sorcier, they're putting a feasibility study out by Q2 this year. This is a world-class iron ore deposit in Quebec. We have a 1% GMR on that. At today's, iron ore prices and what the pre-feasibility study looked like, that'll be, $5 to $7 million to Globex's bottom line on an annual basis just from that one project. And like I remind you, we don't spend any money on it. This is something that'll happen no matter whether we spend a dime on it or not. So those kind of things are really good. Then we have projects like the Radisson is drilling on there, the Kawagama and the New Alger projects, which sit on the Cadillac Break. They're drilling 140,000 meters of drilling on those royalty claims. So that's really good for us. Also on Cartier's Cadillac project, we just put some results out yesterday on that. This is a fabulous project. They've made a new discovery called the Contact Zone on our royalty claims. They're drilling 100,000 meters drilling on that property. I think Nico Eagle is a big shareholder, Cartier. So I think you'll see good things from that project in the near future as they continue to drill.
Well, all of this sounds like really great news, and royalties are one side of the equation only. But option agreements are where Globex consistently turns geology into dollars without taking on development risk. So Globex has optioned out a large number of properties over the years. Where are you currently earning option payments? Which projects are seeing the most activity on the ground? And which option assets should investors be paying closer attention to as potential near-term value drivers?
Well, I think you got to look at the option to Emperor of our Duquesne West project. They just put out a 1.46 million ounce reserve this year. That's double what it was previously. And they're going to drill 15,000 meters of drilling there in the coming year. So you'll see a lot of increases there, I think, and that should continue to move higher, that resource. And then we have two options, as I mentioned, in New Brunswick, one with Antimony Resources and one with a company called Albright out of Australia. Both of them are drilling. Antimony Resources is going to put its maiden resource in Q1 of this coming year on the antimony there. And the Albright Resources, they're going to put out a resource on the gold project, which sits beside the antimony project on their property. So they're currently setting up the drill as we speak. I saw a picture online yesterday. So you'll see drilling there over the next, couple months as they continue to drill that off and solidify that old historic resource. So those are just an example, 3 examples. We have about 8 option agreements right now. We are continuing to talk to people about other ones. So watch this space for more deals. The commodity markets are hot. People are coming to us to talk about properties.
Absolutely. Now, all of this only matters if the balance sheet is managed with discipline, and Globex has always taken a very conservative approach to capital. So Globex is known for running lean and protecting shareholder capital. How are you allocating cash right now? How do you invest? How do the investments fit into your strategy? And what does capital discipline look like for Globex in a market where many companies are still overextending?
Yeah, so we have north of $35 million in the bank in cash and equities. And, we are using some of that money, and we will use some of it to explore. We think it's a good use of our capital. put our money where our mouth is on some of the projects that we haven't optioned out. And that's why we're drilling things like Ruin Merger and Lyndhurst, and we'll do more of that kind of thing in the coming year because we do have money sitting there. We are not going to spend any big amounts on any one asset. We're not going to go, spend the whole pile on buying something. But we do look at things to buy. And, the thing that Globex is maybe missing is more producing royalties to fill in the gap between now and when we'll have quite a few producing royalties. So I think, those are the kind of things we're looking at. We won't spend a lot. We're going to be cheap about it, frugal, wise, however you want to repeat what we are. But we will definitely watch what we have sitting in a bank. We're not looking to lose that cash.
Well, David, such a great conversation. I definitely learned a lot. So thank you for bringing this all to us, and do come back soon to continue the conversation. Again, Globex Mining Enterprise is a company built for cycles. They're not built for hype, with a portfolio that touches discovery, development, royalties, and cash flow across multiple commodities and jurisdictions. We were chatting with David Christie, president of Globex Mining Enterprises, trading on the TSX under GMX and on the Frankfurt under G1MN. This is a company that doesn't need to bet the farm to win. It stacks opportunities, monetizes the patience, and lets the portfolio do the heavy lifting. I'm Lyndsay Malchuk with Appeton Media, right here on the Market Frontlines, where disciplined capital meets real assets. So stay tuned for more to come.